this is going to be the most reliable of any topping sign you can get, okay? The dual or more topping tail bar from that 3 position. 90% of the time, you get a collapse, you get follow through, you get more red to come. Very, very powerful. 70% follow through rate, 70% follow through rate, 90% follow through rate. But you can also use this to make money every single day of your life in the market. Same concept, using 2 or 5 minute charts. This is what the vast majority of the world doesn't have. This is why they're afraid of downward markets instead of the downward markets being the most profitable market periods in existence. Instead of turning them into money, they actually get destroyed by them, but not you. I want to also teach you how you need to make money daily from the markets, or at least weekly. You need to know how to apply these things on a day-to-day basis so that you don't put money into the market, you just frequently pull it out of the markets. The numbers of people on the planet that know this is not very great. That's a very, very small number of market participants that consciously know this. And if you consciously know that the only way a market can start moving down and resetting itself is from one of these 6 pictures, and you know what starts that picture, which I'm about to get into now, my God, this is one of those parts of trading. This is one of the parts that makes you more elite than the majority of traders. What we're going to do first is lay an educational groundwork for how to read the markets from a global perspective. And we're going to then delve into the specific tops. And then we're going to go to actual charts and look at specific things based on the educational foundation we put in place regarding this, okay? So let's get back to business here. Surprises a lot of traders when I tell them that the market can only really do one thing over and over and over again. And some of you who are familiar with my work might remember this concept, but remember, repetition has a value here. It surprises some traders, or a lot of traders, I should say, when I explain to them that the market doesn't have a variety of things to play. It has one primary cycle that it repeats over and over and over again, and it can't do anything else. It's almost as if the market is trapped on rails. All right. Now, this is what I always use and teach to make all of my traders understand the fundamental movement of all markets in all time frames. And listen to me carefully. Every single thing I'm going to explain to you here today is applicable in every market, in every time frame. So you can stop asking, Oliver, is what you're talking about applicable to the stock market? Is it applicable to options? Is it applicable to Forex? Is it applicable to cryptocurrencies? It's applicable to everything because all markets operate based on human intervention between fear, greed, and uncertainty. So everything that I'm explaining to you is applicable across all markets in all time frames. That's short-term time frames as well as long-term time frames. Very important to understand. And what's also important to understand is that all markets operate off of one cycle, not 5, not 7, not 50, one cycle that repeats itself over and over and over again. This cycle is commonly referred to as the bell-shaped curve. Sometimes it's the economic boom to bust cycle, but this is the cycle of the market. It also happens to be the cycle of life. There is the boom side of the cycle here, and there is I should do this in a different color. There's the boom side of the cycle here. There's the bear cycle there's the bear side of the cycle to the downside. There is the top portion of the cycle here. And then we move right back into the bottom portion and we repeat. The market I repeat over and over again, the market can do nothing else but do this: up, top, down, sideways, repeat, or bottom, repeat, I should say. So that's all the market can do. It's literally made up of three things, basically, all I would say four things: up, top, down, bottom, repeat. Up, top, down, bottom, repeat. Up, top, down, bottom, repeat. Now listen to me carefully. I don't care whether you are trading with a 2-minute chart, a 5-minute chart, a 1-hourly chart, a daily chart, a weekly chart, a monthly chart, a century chart. I don't care how far you want to look in the past or how minute you want to look at your data. You're going to find this pattern, this cycle repeat itself over and over again. Now, let me tell you how this cycle is broken up. It is broken up into, as I mentioned, it's broken up into the bull portion, which is the up portion. You have the down portion, which is the bear portion. That's what everyone seems to be afraid of. We do the best in bear markets, actually. Then you have the top portion, which we'll talk about. And then you have the bottom portion, And then you just simply repeat from here. All right. Now, it's important to be successful in your market play, in any time frame, in any market. You have to first be able to determine which one of the four parts of the cycle are you in. Are you in the up portion of the cycle? Are you in the down portion of the cycle? Are you in the bottom portion of the cycle? Or are you at the top portion of the cycle? And so the first act of knowing what to do is to isolate where in your cycle are you playing. Where is your stock right now? What part of the cycle, based on the time frame you're looking at? What part of the cycle is the entire S&P 500 in now, based on the time frame you're looking at? If you are not constantly aware of that, there is no way to get your trading consistently good, because every part of the cycle requires a different approach in your trading. So if you think you're in a down cycle, but you're applying up strategies, you're going to be a losing trader. If you think you're at the top of a market, but if you think you're at the top of the market and you're applying top market strategies, but you're actually in the bottom part of the market, you're going to be an inconsistent trader. So you have to have the ability to determine where in the market cycle are you based on the time frame you're looking at. And you also must have a set of tools for each one of these parts. So you have to have topping tools, which we're going to talk about today predominantly. You need topping tools. What tools do you pull out when a market is at a top and it's going to crack from the top and start moving into the downward part of the cycle? You also need up tools, bottoming tools to profit from the upside. All right. So you need bottoming tools, you need topping tools, you need upside trending tools and downside trending tools. So you need basically 4 tool bags. You need to be able to determine where in the cycle you are, and you need to pull out the right tool bag that matches that cycle. Now, let me quickly demonstrate for you why it seems like there are more cycles than this that repeat themselves. Why is this so difficult to detect? It's quite simple. All right. It's quite simple. Here, take a look. This cycle is not always perfect the way I've just drawn it. Because sometimes, and let's say this is the left leg of the cycle and this is the right leg. Well, sometimes the right leg is higher than the left leg, but the cycle is still complete. All right. Bottom 1, 2, 3, top 4, 4 down, 1 repeat again. All right. And so sometimes instead of the right leg being higher, Sometimes it's tricky to detect because the right leg is lower and the left leg is higher. But it's the same cycle. It's almost guys like a slinky where you have the left and right leg. They can be even or they can be mismatched like that, right? But it's the same cycle repeating itself. Now let's go back here. So in this scenario, you still have 1, 2, 3 top, 4 down, 1 repeat bottom again. And then so the uptrend in your stocks will just be multiple cycles repeating itself. All of these are individual cycles. Cycle 1, cycle 2, cycle 3. It's nothing more than this cycle repeating itself over and over again. 1, 2, 3, 4, and 5. All right? And remember, there are different strategies to play in each part of these cycles. So you can have multiple cycles, cycle 1, cycle 2, cycle 3, in a massive cycle 2. All right? So you can have this massive cycle 2 that is really made up of a variety of smaller cycles repeating themselves. You can have this master cycle 4 that is really made up of a variety of smaller cycles repeating themselves like this. Each one of these is nothing more than this cycle with the left leg being higher than the right leg. And here the left leg and right legs are even. All right? That's the only difference. Now, it's important to understand as well that this cycle works upside down. All right? Same cycle, 1, 2, 3, 4, repeat, okay? And what makes it very difficult to understand sometimes is that the legs are different, that's all. Here, your left and your right are different, all right? Or let's do it this way. That's still the cycle, it's just slanted. It's just slanted. Instead of the left leg and the right leg being even, you've got the right leg down. All right? So left leg, right leg. And this is how you can cycle downward, where all you're doing, left leg, right leg, is repeating the cycle, all right, to the downside. This can be a larger down made up of miniature cycle downs. All right? And so it's important. I know when a trader I can determine the potential of a trader by this, by their ability to tell me with great consistency where they are in the stock cycle. So if I pull up a 2-minute chart and I say, where are we in the cycle? And you'll say, we're in the top part of the cycle. We're in the bull part of the cycle. We're in the bear part of the cycle. We're in the bottom part of the cycle. If a trader can do that consistently, I can bring them across the finish line more often than not, because that's the basis for proper market play. All right. It's also the basis for what we're going to talk about when a market is ready to reset itself from the top. To me, being able to read the reset start from the top is one of the most important skills in trading, because it's the tops that destroy most traders. It's the reset from the top that typically that undoes every good thing that happened to a trader or a market participant in the past. So if they've been benefiting from the run up, what happens in the top is that the top, not being able to read the top properly or play what happens after a topping sign, a resetting sign, it wipes out anything that they earned in the up part of the phase. To me, learning how to read the top, learning how to play the reset to the downside is one of the most important skills in overall market play. Let me know if you understand. Just give me the word yes. Yes, I understand. Let me know if you understand that the market only has one thing it repeats over and over again. And this one cycle is divided into 4 parts. The left leg and right leg sometimes are even, sometimes they're unbalanced. And this is how markets move up and move down. They repeat this cycle over and over again. You got it? Good. Let's talk about the tops. There are 6 ways that markets top out in declines. But you know what? Before I do that, guys, before I do that, what I want to make sure you understand we're talking about here, let's draw this cycle again. And I want you to understand that I want to take you now. We know this cycle is broken up into 4 parts, okay? I want to take you to this part of the cycle right here. That part of the cycle. It's the 3 top part of the cycle. I want us to become experts at reading that, knowing that the probability of a reset in your market, a reset in your stock, a reset in your options, a reset in your Forex contract, whatever you're trading, a reset is due because you're able to read that part of the cycle properly and play it properly. So keep that in mind. We're focused now on this part of the cycle. Let's go. Now, there are 6 ways markets top out in that part of the cycle. Let's cover them. Top number 1, there are 6 tops from that 3 position. Now remember, we're talking about this right there, okay? 1, 2, and 3. Here's 3, okay? Here's 2, and let's say here's 1. Top out, this is what I call the steeple top. It will literally just be a run up and then almost an abrupt stop, as if your run has run into a brick wall, created a steeple like the steeple of a church, and boom, drops to the downside. And the way I used to demonstrate this for my trading kids is I want you to think of this as a steeple top or a cemetery where this stock is about to get lowered down into the ground. Boom. Okay. All right. Either way you look at it, steeple top. All right. Now, this is not the most common top. It's actually a little more common on the bottom, because everything I'm explaining to you is also applicable for bottoms as well. So the steeple top, the reverse of a steeple top is a V bottom. So the reverse of this top would be a V bottom, like this. Boom. That would be your V bottom. This is a reverse V or a steeple top. Top, bottom. All right? But we're focusing on the tops here today. Now, the bottom V's happen more consistently than the top V's. the top steeple tops are not as common as the bottoms are. So this is probably, I still want you to be able to read it, but it's going to be your least frequent occurring top. The abrupt stop and the collapse, the immediate collapse to the downside. You'll see it, but not as frequently as what we're going to cover next. Now, the most prevalent top you will see is the double top. This is the most prevalent top after a run-up in all markets or in any individual markets. The double top is the most frequently occurring top. It is also happens to be the most powerful top, meaning that moves to the downside from double tops will tend to be the most powerful. All right. And basically, what a double top is made up of is simple. It's an initial drop, right, that really starts some degree of concern. This is important. This drop is usually deep enough to cause some concern. All right. And what happens is that you leave some people up here wondering, oh my God, especially the people who have just bought in near the top. They bought in near the top and this thing has dropped sharply from their buy point. And they're like, wow, am I in trouble? Did I buy at the wrong time? Then the market starts to come back on them, and they often will decide once they get a good portion or all of their money back, they will decide, you know what? I'm out. This was scary enough for me. I'm out, creating sell pressure. So these people begin to sell, all right, causing what's commonly referred to as a double top, all right, and the collapse happens from here. This will be your most common top, the most common top you see. But the elements that I want you to understand is that this should actually be drawn a little bit deeper. This drop should be, it's not always concerning, but the more concerning, the better the odds that you top out near this first top there. There's your double one and boom. Now I'm going to teach you to come into this play here to profit from the 4 leg. If this was the 1, this is the 2, your double top is the 3, you're going to ride the 4 into a 1 again. All right. But we have to be able to read the tops. So remember, you've got your steeple top, which is not all that frequently occurring, but it does happen. Then you've got your double top, all right? Your steeple top, I'm going to teach you to come in somewhere around here. I'm going to teach you the event that you're going to look for there. I am going to teach you in the double top to come in around here, okay? So that you profit from the 4. That's resetting the stock, resetting the market, repricing, I should say. All right. And then there is number 3. There's the what I call the left shoulder double top. So what you have in the left shoulder is higher. So it's not a true double top because the left shoulder, here's the right shoulder, the left shoulder is higher. So what you have in this scenario is you've got a sharp drop that causes concern. You are leaving people up here wondering, did I make the wrong move? What's going on? All right. They are at a loss here, but the market starts to narrow their loss and narrow their loss and narrow their loss and narrow their loss, but it doesn't quite get all the way back to the top. And boom, you get this event here, which I'm going to teach you, that tells you you're not going to get the normal double top. This is going to be a lower top play that kicks you into this stage 4. All right. So drop and boom, not all the way back to the top. Okay. So that's the left shoulder top. And of course, you have the right shoulder top. Now, this is really quite interesting because this is also a very powerful top, because what it does is it traps new traders that believe in a brand new bull run. It traps them in the play at a new high. So let me explain this to you. So you have this run up here. All right, here's one. You have this major run up, and then the stock cracks, leaving these people once again questioning, did I do the right thing? Am I going to have to take a loss? The market starts to narrow their loss, and actually it doesn't fail at or before. It goes through the high, all right, giving these people renewed hope. They often buy again. Others come in to buy the new high, all right, only to have this a failed new high that breaks back to the downside. Okay, this traps a lot of people in this, what's called a false new high, a false new high. Okay, I'm going to teach you to come into this around here when you're right back under the prior high and you have the proper event. Okay, now, again, the key elements that you want here: a concerning drop, a rally all the way back that takes out the prior high, usually not by a large margin, and then an immediate failure back below the prior high. Many people here in this area are trapped, and they will start selling out of their play at a loss, causing your stock to accelerate to the downside. All right, that is right shoulder top. So once again, you've got the steeple top, you've got the double top, you've got the left shoulder top where the left shoulder is the highest, and you've got the right shoulder top where the right shoulder is the highest. Okay. Now, number 5, you've got the 5 flat top. You've got number 5, the flat top scenario, where it looks like it's going to form a double top here, but it actually comes back, and you start to get this multiple top like formation in the form of a relatively wide sideways movement. So it initially looks like it's going to be a double top maybe, but it comes all the way back again and then drops again. And so once you get the third one, meaning that this is 1, this is 2, and you get a number 3, you're in a number 5 type top where you are vacillating back and forth, and the crack comes here where you break through the area of vacillation. All right. And so you have your 1, 2, here's your 3, your 4, your bear market 4, and then you repeat again. All right. And that is number 5. Now, some traders say, well, Oliver, what if this breaks out and moves to a new high? What is that? Well, that would prove that this is not a top. So let me give you some clues as to determine What's a pause versus a top? See, we're talking about a top, but there is something called a pause that has similar characteristics of a top. And I don't want you getting fooled by pauses versus tops. Notice the difference in my drawings here. Notice the top and notice the pause that I'm drawing. The pause is tighter, the pause is narrower, the pause is more controlled, whereas the top is a little wilder, whippier, wider, looser. Tops are looser than pauses. Pauses are tight, they're contracted. They're almost like coil springs that can continue to catapult you forward. Everything I'm explaining here is also applicable on the downside, traders. So you can drop and pause and boom, continue the drop. But if you drop and you're like that, that's usually a bottom, okay? Wilder and whippier, and you break, and that's usually a bottom. Whereas that this tight, coiled, narrow is usually a pause, and you're not done with the downside. So you can drop, pause, drop, pause, drop, bottom. Okay? Same thing on the upside. You can actually run up, pause, run up, pause, run up, and top. They have different qualities to them. These are pauses, and this one's your top. And if you break, you know what's next. You're moving into 4. All right? That is top number 5. Okay? And then top number 6, you get sometimes, it's this sort of rounded, sloping top. It's not a V. All right? So it's not a V. It's not a double top. It's not quite a sideways top. It's rounded. Boom. Okay? And this rounded top, I would say that it's not the most frequently occurring, but it's more frequently occurring than the steeple top. So you still should know it. We need to know all 6 of the tops. Now, let's review all 6 of them. You've got the steeple top, you to the far upper left. You've got the double top. All right? You've got the left shoulder top, where the left shoulder's higher than the right shoulder. You've got the right shoulder top, where your right shoulder is higher than the left. You've got your basing top, where your stock is basing and vacillating back and forth from the top. There's this tug of war between the groups of traders that still believe the stock's higher and a growing group of traders that believe, no, we're topped out. And they're tug of war, and it's a tie right now until you get, boom, you break that. And then you have the rounded top that is a little bit more gradual, and boom. All right? And guys, I will tell you this. Listen to me carefully. There is no other way for a market to top. The value of knowing your 6 different type of tops is the values embedded in the fact that you will never be thrown by what if your market is topping or not, because no top can form unless it's one of these 6. If it's not one of these 6, it is not a top. If it's not forming one of these pictures that I've drawn from you, it is not a top. It's temporary. It's not a top. All tops fall from these 6 things. So what I want you to do is I want you to take a snapshot of this slide right here. Take out your phone, take a snapshot, or come back to this point in the presentation at some point in the future, and I want you to mark these 6 pictures down. Knowing the numbers of people on the planet that consciously know there are only 6 ways a market can top and start moving to the downside. All right. I know each one of the 6. The numbers of people on the planet that know this is not very great. That's a very, very small number of market participants that consciously know this. And if you consciously know that the only way a market can start moving down and resetting itself is from one of these 6 pictures, and you know what starts that picture, which I'm about to get into now, my God, this is one of those parts of trading. This is one of the parts that makes you more elite than the majority of traders. All right. There are a certain number of things that separate you from most other traders. This is one of them. Another one is stop adjustments, which is not the topic of our talk today, but stop adjustments is another one of those categories that separate you from almost all of the traders. Knowing the 6 tops and how to hit them is another element of trading that elevates you way above the majority of market participants out there. All right. All right. Now, let me know so far, guys, do this for me. I want to know if you understand what we've covered so far. You got this? Talk to me. I want to see your comments. I want to see your comments. All right. You got it? Whoa. Wow. Awesome. Boom, boom, boom. Good. Now we're gonna get to charts. All right. I promise you, we're gonna get the charts here. Good. Yes. I want you to be more elite just as a follower, just as a trader of mine. I want you more elite. These are the specific things that make you more elite. All right. Good. Good. Now, okay. So why don't we go to the next step? So now that you know, listen, now that you know, there's only one thing the market repeats over and over again. This one thing is divided into 4 pieces. We are focused on the top piece right now for this talk. All right? We're focused on the top piece, but understand there's only one thing the market can do over and over again, right? Bell-shaped curve. That bell-shaped curve is divided into 4 pieces, 4 parts. The part that we're zeroing in on is part 3, but your ability to read where you are in that cycle is the key to your consistency as a market player. You have to always know, no matter what time frame you're in, and we'll look at charts so that you can practice this with me. All right, we will do this today, but you've got to be able to know that always so that you know what tactics to bring out. But in this cycle, which we divide into 4 pieces, we're focused on the top portion of, or the number 3 part of the cycle, right? Not the bottom, not the up, but the top portion of the cycle. Now, what we're going to go over now, something needs to happen at 3. Something needs to happen at top. No matter which top you have, you can have the steeple top, you can have the double top, you can have the basing top, you can have the left shoulder top, you can have the right shoulder. Whichever top you have, something must happen. You can't anticipate it. You have to wait for some event to happen. And there are 3 main events, right? There are 3 main events that happen from these tops that I need you to know next. Let's go. All right. So there are 3 main bar types that top markets out in the 3 part of the cycle. Now, if you've been following my work for any period of time, you're going to know these 3 things. But again, repetition has a huge value when it comes to understanding deeply trading tactics and techniques. In addition to that, we're putting these three events at the right place in the cycle, in the right top. So the three things that I want you to there are more things, by the way, but the three things I want you to predominantly be aware of are bare elephant bars from the top, So a bare elephant bar is nothing more than an elongated, powerful red bar down. Boom! Like, think of if a bar could make a sound, it would make a boom like that. Not boom, boom. No, a bar that makes a heavy, powerful sound. Boom. All right? That's an elephant bar. Now, a topping tail bar is by definition a small body. This is a big body, but the topping tail bar is a relatively smaller body with a relatively long tail on it. It doesn't have to be super long, by the way, but it has a tail on it. All right? So think of shrinking the red down. Like, think of taking this red and shrinking the red down to about here. And what do you have left over? You have the shadow of what used to be left over. You see, this topping tail bar was a red bar. It was a green bar at first. It was a green bar, actually. But what happens is that as it's going down from the high, that downward movement is really the color red. But the point I'm trying to make is that this is a downward movement. You get the color at the bottom, but it's a downward movement from the high. These are downward movements from the high. The stock traded up here at one point. It moved down from the high. So I often refer to these bars as sort of like bare torpedoes as well. They sort of look like a torpedo. All right. Now, the topping tail bar, let me just tell you this. The elephant bar, and I need you to write these numbers down. The elephant bar from a top, the bare elephant bar from a top has about a 70% success rate or follow through rate. Right? You'll see I use them interchangeably. Success rate, follow through rate. What I mean by follow through is that you follow through with more red after this red. So there's more red to come. That's what I mean by follow through. All right? 70% of the time. Now, what does 70% mean? It means that if you were to do 10 bare elephant bars, on average, 7 out of the 10 will produce more red after the elephant bar has formed. Okay? So 7 out of 10 go lower. All right? Now, on the topping tail bar, you get about the same. It's actually maybe a tiny bit less, but it's so tiny, let's just call it the same. So this is about a 70% follow through rate as well. All right. And just so you know, guys, I try to isolate for my traders the things that are 70% and above. All right. I don't teach. There are many things that have a 50% follow through or success rate, 60% follow through success rate. I don't teach those things. And there's a lot of them. What I try to do is zero in on 7 and above, 70% and above. I want you winning 7 times out of 10, 8 times out of 10, 9 times out of 10. I don't want you winning 6 times, 5 times, 4 times. I want it 7 and above. So everything you will ever hear me speak to you about, you can be guaranteed it's 70% and above success rate, okay? So your tail bar, remember, we're talking about the cycle. The tail bar has a 70% follow through rate. Now, 70%, 70%, 90%. Dual, or I'm going to say dual or more, because sometimes you might get triple tails as well, which count. So it's dual or more tail bars. You're in the 90 percentile. This is one of the most guaranteed topping formations you will ever experience in the market. This is the type of formation where you go to your neighbors, you go to your relatives, you borrow as much money as you possibly can and bet the farm. Now, I'm only teasing. I'm only teasing. All right? This is edutainment, so it's not trading advice. I don't want anybody to, Oliver, you said. No. But what I'm saying is that this is going to be the most reliable of any topping sign you can get. Okay? The dual or more topping tail bar from that 3 position. 90% of the time, you get a collapse, you get follow through, you get more red to come. Very, very powerful. All right. Now, I show you this dual topping tail bar with conflicting color because I want to demonstrate that really the color of the body doesn't really matter. I don't care if the little body at the bottom of my tail is green or red. It can be green here too. It's the tail portion that has the power. The power is in the tail. It's not in the body. So I don't really care which one it is. There's a small, slight, almost insignificant difference. All right. So obviously red is better if you're looking to go down, but it's so negligent that I want you to consider the colors equal as long as the tail is strong. If the tail is strong, you're going lower a high percentage of the time. I don't care what color the body is. All right. So 70%, once again, 70% follow through, 70% follow through, 90% follow through to the downside. From position 3, listen to me carefully. If you take any of these bars, guys, I'm talking about position 3. There's position 3. If you put this there, it doesn't have that. It doesn't have 70% follow through. Even if you put it here, it doesn't have, it has the highest rate there. Do you understand? All right. In 3, this is powerful in 3. This is extraordinarily powerful in 3. All right. So I want you to understand we're talking about the top of your cycle, the top of the top of your cycle, the top of your atom. So remember when I told you that there's the steeple top. So what I'm showing you now is that you can have a steeple top that is, the top is locked in or formed with the bear elephant bar. You can have the top that is locked in or formed with the topping tail bar, or you can have the top that is locked in or formed with the dual or triple tail bar. 70% follow through rate, 70% follow through rate, 90% follow through rate. All right. Now, do I show you another one? No, I don't. So guys, I just show you one example of the steeple top. So remember, the same thing applies to all of your other tops. So if you get the double top, you can have this elephant bar happen from the double one. That's how the double forms. or the double can form with the double. You can have the left shoulder. So you can have this scenario, boom, where your topping tail bar is your top. So I'm just showing you one of the tops, but the three bar types ignite the top no matter which one you're dealing with. Okay? Steeple, left shoulder, double top, left shoulder, right shoulder, rounded. All right? So if you have a rounded scenario here, you can have an elephant bar, crack it. Boom. Okay? Like that. Or if you have the sideways, there's the elephant bar breaking the sideways. All right? So I'm just showing you one, but these three things typically kick off all the tops. They're the ones that ignite all the tops. Okay? Good. Now, the most common top where you'll get 65% of what you're going to experience is what I call the clearing elephant top. This is the clearing elephant top, and I'm going to try to show you this with charts in just a few minutes here. The clearing elephant top is a solid, fat, bare red elephant bar. I'm going to give you a number here that cracks 5 bars before it. So 1, 2, 3, 4, 5. So if this in one fell swoop eliminates, wipes out 5 bars before it. Let's say these bars were up, 2, 3, 4, 5. And in one fell swoop, boom, you eliminate this bar, 1, 2, 3, 4, 5 bars, all in one fell swoop. That type of elephant bar crack from a steeple top is like, wow. Okay? This is what you're going to see. This is the type of top you're going to see about 65% of the time. So all the others, like the topping tail bar, the double topping tail bar, that's less frequent than this type of top. This type of top you're going to see the most. It's the clearing elephant bar top. Okay? So here's the steeple version of it where you break 5. I want you to keep this number. You're breaking 5 bars to the left or more. It's 5 plus. It's not just 5. 5 plus. Sometimes that bar breaks 10, 12, 20, but minimum 5. Now let's go to the next one where you have a double top clearing elephant. Boom. Okay. Again, I want this bar to, at a minimum, break 5 former bars before it, whatever time frame you're looking at. If it's a 2-minute chart, then 5 2-minute bars. If it's a monthly chart, then 5 months. Okay? The time frame doesn't matter. The concept is the same. All right. And you can crack this way from a sideways base, clearing through. Look to the left. You're clearing to the left. Okay? One fell swoop, clearing out. Data to the left. Huge follow through rate. And these are the most common you're going to see. You're going to see it from the steeple. You're going to see that cracking, clearing elephant from the steeple, that cracking, clearing elephant from the double top. that cracking, powerful elephant from the sideways base top. All right. And that's what you're going to be seeing as a topping sign the vast majority of the time. Now, once again, how are we doing? You following are you picking up what I'm laying down? You're following what I'm covering? Does this make sense? You've got the 3 bar types now: elephants, tails, dual tails, and the clearing cracking event is your most prevalent one from tops. All right? Any time frame, any market, 2 minute, even 1 minute. I don't like the 1 minute for your trading, but 1 minute all the way to a monthly chart, a century chart. All right? Okay. Very important. Now, why don't we go to some charts here? I'm going to show you some charts here. Let's see. All right. A look at history. Okay. Let's take a look at history here. There's prior market tops. All right. Let me just explain something to you here before I do this. I want to explain something here. I want you to be aware of the fact that there are very few market participants, traders, that are still in the game today from when I started. I am one of the original OGs all the way back in the 1980s that's still here. All right. And I want you to know that because of 4 decades of market play, I have gone through more tops, more cracks, more crashes, more crises, more resets than probably anyone you'll meet in this industry. All right. I lived through the 1987 collapse. I started my career at the end of 1986. So I cut my teeth in the market in one of the most vicious bear markets in history, the crash of 1987, where 60% of Wall Street got fired. I didn't get fired. All right. And so 87, I lived through that troublesome market top that happened during the Iraqi war, 89-90. I lived through the 1997 Russian ruble collapse. I lived through the 1998, the China Tiger, they call them the China Tigers collapse. So there was a Russian ruble. Remember I told you these resets happen one market at a time. So the crash in the Russian ruble sent a shockwave through other markets. And even the US market had that brief crack in 1997. Then it was like many investors were putting money into the rapid growth that was happening in China back in the mid to late 1980s. And a bubble built up into the China, many of what they call the China Tigers. They were the new tigers coming into the market. The China Tigers collapse sent shockwaves through the market. I lived through that. I lived through the internet bubble burst in 2000. Okay, I just put out a video regarding that, but by the way, shortly after that period. Lived through that. I lived through the 2009 collapse that brought the financial industry to its knees, one of the most profitable periods of my life. Okay. Of course, I lived through a few mini collapses in 2018. That was a really small, but the big drop in 2020, which I called right here on YouTube for you. So many of you were prepared for the 2020 collapse. We scored huge on that based on what I'm teaching you right here. Same concept. We were prepared in February for the collapse that happened in March of 2020 and made a freaking killing in the markets. My point is this. I have probably lived through more collapses, more crashes, more troublesome period in the market than anyone you will ever meet. And I will tell you this, every single one started the way I'm teaching you. Every single one I've lived through started exactly the way I'm teaching you. If you get this down, a top will never fool you going forward. If you get this down, you will no longer be afraid of market tops that lead into bear markets or very, very vicious crashes to the downside. If you get this in, the part of the market cycle that gives almost the entire world the greatest degree of trouble, it's going to become your biggest money maker. My biggest money making periods in the market were during all of the collapses, all of the crashes. Why? Because markets fall harder and faster, making them more profitable periods. The problem is that most people don't know how to identify them. Most people don't know how to play them and turn them into a money-making period for themselves. And that is what I don't want for you. The reason why I'm focusing on tops, and right now the market's in more of a bullish period, is because of what I feel or believe might become the scenario you're going to have to read in 2024. I want you prepared now. You don't get prepared, right, for something when it's happening. You get prepared for the possibility of it happening in the next year, in the next several months. There is a possibility that everything that I am teaching you today, you're going to have to use. And if you use it right, you're going to actually get rich. You're going to actually potentially change your life. 2020 collapse was life-changing profitability because we were prepared for that March collapse. I gave talks in Las Vegas. I gave talks in Orlando. I gave talks all over about the upcoming collapse. Go research this. It's on YouTube. Me calling for the collapse, not from rocket science, from exactly what I'm covering here. All right. And so I see the possibility of this coming up. I want you prepared for this. I want every single one of my traders, if it happens, I want this to be life-changing for them. And it will be life-changing. I am not going to let them miss it. If it happens, it may not happen, but if it happens, I'm not going to let them miss it. If it happens, they're going to nail this thing. And it is going to be life-changing. I have had the most life-changing periods during the tops and the collapses that fall from the tops. They've been where I've made my longest green in the market. It's powerful. It's very powerful. All right, so let's go back to charts here. So this is one of the collapses that I lived through. That's become sort of part of market folklore. It's part of market history here. The internet bubble, where everything that you put a .com title on was just running and running and running, guys. And I started my firm all the way. I started my firm here. So I caught, guys, you don't understand. I left Wall Street to start my firm there. Look how beautifully timed. Well, it wasn't like that. It was more flattish. Look how beautifully timed the start of my independent career in this industry was. Boom. Now, here's what I want you to understand about the tops. The best tops are going to come when your two key moving averages are separated from each other. So what are the two key moving averages? You've got a 20-period moving average, that's the blue, and you've got a 200-period moving average. If you follow my work here on YouTube, you know these two moving averages are staples. You do not trade any time frame without these two moving averages, the 20 and the 200. So we're looking at a monthly chart, by the way, right now, right? And whenever you're looking for macro Where are you in the macro cycle? You've got to look at the monthly chart. That's the macro time frame. Your income time frame is 2 minute and 5 minute. Your macro cycle time frame is the monthly. Write that down. That should be something you write down. Macro time frame. Where are you in the macro cycle? Monthly chart. How do I make money every single day? 2 minute, 5 minute chart. Okay. So we're looking at a macro picture of the NASDAQ 100, and we're looking at when Oliver started his company, and we're looking at how Oliver and his company profited a huge right into the top. Now, how were we prepared for this top? It's based on what I told you, where you've got a relatively extended leg 2 leading to a potential leg 3, okay? Leading to a potential leg 3. And you've got the other criteria I want you to know here, I'll do this in a different color, is that you have wide separation, those are the best, between your 20 and your 200. So when you have an extended 2, wide distance between your 200 and your 20, and preferably your stock or your item is not near the 20. So see how that's near the 20 here? See how that's near the 20? See how that's near the 20? And see how this is not near the 20? So you're not near the 20. The 20 and the 200 are far apart, and you've had an extended 2. I'm going to repeat that. Your 20, you've got an extended 2. You had an extended 2. All right? I'm drawing terribly here. You had an extended 2. You got wide distance between your 20 and your 200, and your stock is not close to the 20. Potential 3. Now, what you need from this, you're either from here, you're going to get a steeple top, or you're going to get a double top. But which one do we have? Which one do we get? Rally, drop, rally, and do you see it? Do you see it? I want to see your comments. Do you see the top that I taught you? Which one is it? Talk to me. I want to see your responses here. Get your responses. Do you see it? You saw it? All right. Let me know. All right. I know we're on a delay, so I'm going to have to wait a little bit to see your responses, but yeah. You got it? All right, cool. Good. That's right. Well, I don't care if you get it mixed up, left shoulder, right shoulder. It's the one where you don't get the double top, right? You get the lower top. You get the lower top, okay? So let's go back to this. You get the lower top. Sorry. So you get the lower top here. Boom and boom. Now, what is the real signal here, though? All right. The real signal is when you have something really strong, you got that strong elephant or that topping tail, remember, or that dual topping tail. You really should wait for that, which means that sometimes you're not going to grab the absolute tippy top. That's okay. You don't need to grab the tippy top. But here is where you have it. Because there is your clearing event. Remember I told you the clearing elephant crack is going to be your most prevalent, the most prevalent way you're going to know the top is in. That's going to be the most prevalent way. All right. Now, I want to tell you, I'm going to give you a little hack here. You can always, for greater clarity, remove the tails if you're not playing the tail. If you're playing the tail, that's different. If you're not playing it and it happened in the past, then take it off to give yourself some greater clarity. And boom, you can see this cracked everything. There's your clearing event. Now, what my traders would do is they know that they're going to get in on the clearing event. They're going to strike in this bar to profit to the downside. They're going to add on the first color change. What's the first color change? You get the opposite color, and then red eliminates green right there. So they're jumping in on the clearing bar. They're hitting that, boom. Okay. They're also adding on the first time a red wipes out a green bar. Only the first time. They can do it again, but the first time is required for them to do it. So I want you to know the formula. They're going to pile in, boom, they're going to hit the clearing and add on the color change. It's a two-step process. Hit the clearing, add on the color change. And okay, good. Now, I want you to, let's take a look at the S&P during the 2000 top. Now, look at the type. Remember the types you have. You've got the steeple, you've got the double, you've got the different shoulders, right? You've got the sideways, and you've got the rounded. And I would say out of all 6 of these, you've got the rounded, more or less. All right, and boom. Now, where is the event? I want you to look at the event. All right, this is when Oliver started his firm, September of 1994. Boom, I started off at the right time. I've always been fortunate that way. Yeah. All right. Very, very profitable period for me and my company. Rocked. Okay. And rounded top. But there's an event here. Now, remember I told you eliminate the tails. So eliminate any tails that are confusing, that might confuse you here. Do you see a red bar that cracks below 5 or more bars? Do you see it? Can you spot it? Can you spot the first time that one of the things I'm really sorry about is that I don't have the 200 on here. The 200's like that, right? Or maybe even. So you've got distance away from the 200. But do you see it? Do you see it? I think you do. So right here, something happens that I taught you. Well, let's do it like this. You clear this bar. Clears 5 or more bars before it. You understand that? It clears 5 or more bars before it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It clears all of these actually. And at the same time, it's breaking below its 20. Oh, it's clearing and breaking. And I'm sorry I don't have the 200 here. Your moving averages are wide apart. Just trust me. So extended to, well, elongated to, all right? Y20 and 200 wide apart, clearing event from that state. The rest is history. Now, remember the formula. You dive into the clearing, boom, and you add on the first color change. What's a color change? Let me draw what a color change is. So a color change would be this: red, then you get green. That's the opposite color. And if red removes the green, that's the color change. Red removes the green. Boom. It wipes the green out. Color change. See the green here? Red wipes the green out. Now remember the hack I told you. Get the tails out of the way of your reading, and you'll see how clear this bar is breaking the green. Get this tail out of the way here. It's the topping tail we're focused on anyway, so the bottoming tails don't matter. And you can see clearly when you eliminate these tails here that how cleanly this bar is breaking. It's breaking data to the left, breaking below the 20, far below the 200. Sorry, I don't have that. After an elongated 2. All right. And so you're going to hit the first red bar up. You're going to add on the first color change, and the rest is history. Can you do other color changes if you like? Yes. But the mandatory one is the first one after, and the rest is history. Now, these are major, major drops in the market, guys, because we're looking at a monthly chart here. This is the macro version of it. I will show you the micro version because I never want to leave you without showing you how to make your living in the market with what I teach. This macro view of knowing when your overall market's going to crack can also be applied every single day to make money. All right. And I am going to cover that next. And that's how we're going to close our event. I always want you to be able to use what I teach you every single day to pull money out of the markets. All right. So we got the 200, we got the S&P. Whoa. We got the S&P 500 clearing event. Here in 2020, there's the 2020 collapse I told you. And what you have is a 2 that really just cracked hard with a clearing event. Here's your elephant bar. Now, what is it? It's doing damage to the left in one fell swoop. It's eliminating so much green, prior green, in one fell swoop that you've got to know that's your igniting event. That's your clearing event. All right. We had other, remember I told you 2018 were little minor bear drops that we profited from. So here is the clearing event here that's wiping out so much to the left. Here is, you don't see the 200 there, but you're wide apart. Your stock is wide. Here is your elephant clearing, minor drop, but still a crack. This clearing event here led to this serious drop there. That clearing event that did damage to all of this data to the left ignited this collapse. And if you were to study almost all the collapses, you would primarily see this clearing event, but you'd see some tail events and some dual tail events as well as bottoms, by the way, traders. So at bottoms, as an example, here is more of like your V bottom in the S&P. Here is more like your double bottom in the S&P. Okay. And so Everything I'm teaching you for tops is applicable for the bottoms as well. I just want you ready for the top because I think that it's probable we could be dealing with this top scenario sometime in the beginning of 2024. All right, the beginning to middle part of 2024. And I just want you to be prepared for it. All right, now let's take a look at where we are right now. And this is what I want you to be prepared for. So we've had this elongated 2, okay? And so remember what I told you, you need that elongated 2, guys. You need that 2, all right? We've got that elongated 2. And remember the tops, remember that elongated 2, and you get that first scary drop. Remember I told you, leaving behind the guys up here, like, wait a minute, what happened here? Is this troublesome? Should I think about taking my profits here? Or is there going to be enough profit taking once the people up here get their money to cause this to roll over? We don't know. It's possible. I want you prepared for it. Because, and how are you going to know? Say, Oliver, well, how am I going to know? I taught you how to know. What's the most prevalent event? It's this, right? If you get a clearing from up there that damages 5 or more in one fell swoop, I'm telling you, that's what we're going to get. And you had better be prepared for it. It is going to destroy lives if this happens. It is going to make people poor. It is going to wipe out retirement accounts by people who don't know this. Do you understand what I'm saying, guys? What I am teaching you is how to identify something that is totally destructive for millions and millions of people. This destroys lives. This wipes out 401ks, pension plans. They're not market players. They don't know. And I am telling you that we could get this kind of reset in everything because the last period of 2 was a 2, not just in real estate market. The last 2 was not just in stocks. The last 2 run up was not just in debt. It was in everything. And so when you get these cracks in one market that sends waves through the others, that's bad enough. But if you get it in everything at the same time, are you kidding me? It can be so damaging that the whole market resets itself, that the whole financial world resets itself, that everybody who had something basically loses it all unless you know what you're doing. I don't want that to be you. There is a possible reset of everything coming in 2024. And I want you to be prepared for it. I want you to be right here because if this happens, we don't know. I just want you to be prepared for it. And there is a greater than normal probability we're going to get this. It's not guaranteed. I want you prepared for it. But if it happens, this is going to be, do you understand this? One of the most profitable periods of our lives. You make the most in these reset scenarios. The biggest green comes in these resets, the biggest profits. You saw the movie The Big Short. You know Michael Burry, who just lost on his short, but you know he made the biggest score of his life on the way up. No, on the crack of 2009. The biggest money is always this way. And I want you prepared for it. I would love for you to be here with me because if you're here with me, we're not going to miss it. I'm not missing it. I haven't missed I would say the last 6 collapses because I was young in the first couple, the first 2 or so. So I would say out of the 9 collapses, I would say 7. I missed 2, the first 2, but I profited huge off of 7 of these reset scenarios. Huge. And each one, believe it or not, got bigger and bigger. I think the next one is the biggest of all. If it happens, it might get pushed. It's going to happen, guys. Whether it happens in 2024 like it may, if it doesn't, it's going to get pushed a few years out. It's coming. You can't have a 2 in everything and not have the eventual 4 happen. So this is the first scenario where the 2 was in everything, not just real estate, not just stocks, not just debt. You understand? This is the first time everything was in a 2, which means that when we get the 4, I want you to understand the enormity of this. When we get the top and the 4, it is going to be in everything. It is going to be a collapse like we haven't seen. And if you're not prepared for it, you'll either get wiped out or you'll miss one of the biggest opportunities of your lifetime. Now, let me go back to the charts here. So, we could have, let me just do this in green here. We could get this kind of movement, and then you get sort of like boom from that higher top. Okay? So you could get that right shoulder top. Okay? You could get that, we could peter out here and get that kind of double wherever it happens, that double top from here. Why do I need you looking for this or being prepared for the possibility? Why do I need this? Well, look, I want you to look at this. Here's the 2. And we did get drops. See these drops? But what's different about this one? Do you see the difference about this one? This is the scary. The others were kind of scary, but this is the big one. This was the one that shook the whole thing at its foundation. So now the next up move, because of the seriousness of that first drop, this up move might be sold into by all these people that were riding this, putting in huge sell pressure because this was scary enough for them. They got most of their money back. They're out. And if that happens and you get the clearing event over here or something like that, you know what to do. It's 70% to the downside. And I am telling you that it has more dynamite behind it because this is an everything bubble that can cause the whole financial system to reset versus just the real estate market resetting. And we've got a lot of things happening in the world today, guys, that can lead to all feeding into this, from wars breaking out, geopolitical conflicts going on, recession likely to hit in 2024, the greater effects of the interest rate hikes by the US Fed, that has a 6 to 8 month delay that can really hit an economy hard. We haven't seen the effects yet of a lot of the rate hikes because there's a 6 to 8 month lag for every rate hike. It doesn't get worked into the system. So we piled up a bunch of rate hikes that we haven't seen hit the market yet. When they start hitting the market, boom, 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 it's chopping the economy down. causing a recession. You've got wars and conflicts heating up. And you've got this run up that's giving the majority of people their money back. It can lead to a rollover that is massive. Now, I'm not saying this is going to happen. I think it's stupid to think in absolutes that way. I just want you ready if it happens. This is exactly what I did in the beginning of 2020, and we were ready for that collapse in March of 2020, and we grabbed it and nailed it perfectly. I've got videos talking to you about congratulating all of you on the enormous gains we made from that. All right. Now, I have to do one more thing with you before I let you go. All right. We're going to take a look at the S&P, the same thing. We got this drop here. It remains to be seen whether we're going to peter out somewhere here and create the double top, whether we're going to go here and create the double top, or whether this is just going to keep going. If it keeps going, we've pushed it out until another cycle, another 4, 5, 6 years out. It's possible too. All right. But I want you prepared for this. Now, how do you take this information, this knowledge, this teaching I just gave you about reading tops? How do you apply it every day to your trading to make this concept give you money every day? I never want you not doing that. I want us always going after big money, but I always want you earning a living. That is my key. I am the earn a living in the markets guy. And that is where I want you to be always. That is the skill that I want you to have always. Cash flow from the market is king. Earning a living day to day is king. Being able to pull out money without depositing, no deposits, to withdraw from the money, to have an automatic ATM machine that other people put money into and to pull money out is always the key. I want to show you very briefly how we take, all right? I want to show you how we take this concept and use it to make money every single day of your life. And then that will bring us to a close. Going a little bit over, but I want it to be kind of thorough here with you guys. And I hope you don't mind. I want it to be kind of thorough with you here. All right. So why don't we can do this. Boom. Now, here, this is the first thing I see here, guys. Many of you know that I'm a huge Bitcoin proponent, and what you're looking at here looks like an hourly chart. But guys, if you think about this, this is I wasn't even planning to look at this, but we can look at any chart you want to, and you'll be able to see what I've taught you. I've taught you that when you get wide separation from your moving averages, and you've had an elongated 2, let's do this in different color. So you've had an let's even widen this out. You've had an elongated 2. So here's your elongated 2. All right. And you're either going to get a V top, a double top. You know all the different tops, right? So here you get the V top. Now, Bitcoin does do a lot of V tops. And you get the clearing event that ignites the V top. Look. Boom. So remember the formula? Do you remember the formula? You dive into the clearing event. You protect yourself above the clearing event. All right? Don't let the market take the clearing event away from you. So your stop is above the clearing event. You dive into the clearing event. Boom! You put a protective stop above the clearing event. You add on the first color change. Boom! You can add on the second one if you like, but the first one's mandatory, and the rest is history. Now, Remember I told you what bottoms, right? The bottoms work as well. Dual tail, single tail, dual tail here. All right. So that's very, very, very powerful. So we can look at anything, but what I want you to do is I would like, since I would like you to understand that when it comes to making money every day in the markets, I teach my traders to use the 2 and/or the 5 minute chart. And so if we look, we can pull anything up, and I want you to be able to read where you are in the cycle. Now, first of all, you need to be able to read cycles. So you need to be able to understand that that is one complete cycle. You need to understand that this is another cycle. All right. So you have 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. They're just individual cycles. Now the cycle starts moving this way a little bit. Boom, boom, and so forth and so on. It's not, sometimes it's not exceptionally clear, but most of the time you should be able to read where you are in the cycle. And if you know you're in the top of the cycle based on where the last move started, because you have an elongated 2 here, then you should know that from this 3-point of view, if I can get some tails or a clearing bar, I'm in the money. All right? Boom. Okay? And you should be able to know that if I am, here's the cycle. Look at the cycle. Boom. Here's my left leg. Here's the up. Here's the 3. Here's the 4. Here's the 1 again. If I'm right there, what should happen next is a 2. So if I'm right here, hope you can see this. Let me bring it over. So if I've gone from this site here, cycle complete, now I'm here, VTOP for cycle complete. All I've got to do is boom, bottoming tail bar, first color change. Wow. You've got to know where you are in the cycle. All right. You got to know where you are in the cycle, because all the market is doing is giving you cycles. All right. Over and over again. Now, here is a drop. All you have to do is if you're drop, that was a 4. If you get a bottoming tail bar here, you're potentially igniting into a 1, right? So here's your tail. Here's your drop. Here's your drop, tail. Here's your drop, color change. If you got a drop before it, if you've got a drop, I should do this thicker. If you've got a drop before it and a tail, you should know what's next. If you got a drop before it and a tail, you should know what's next. If you've got a rally before it and a tail, you should know what's next. And if you do this on smaller time frames, you can literally make a living. You can make a living. Let me see what I got here. All right. You can literally make a living, guys. I'm just off of this concept. So let's look at yesterday's data maybe on, let's take a 2-minute chart. And this is yesterday. We're looking at NVIDIA. We're looking at a 2-minute chart, right? So you guys now should be able to tell me this is a 3. You should be able to tell me that's a 3. You should be able to tell me this is a 1. This is a 1. And this is a 2. My drawing is terrible. This is a 2. This is a 2. This is a 1. And that is a 2. And this is a 3. How is that a 3? Look at the cracking, clearing elephant bar. Just look. Look at what I taught you. This is thousands of dollars if you know how to play it right. In minutes. Look at the clearing from a 3. Look at the clearing from a 3. Look at the clearing from the top. So look at this top. Top, drop, lower top, crack. Look at the more micro one. Drop, lower, crack, crack. Look at your 1. Color change from 1. Boom. Look at your 1. Color change from 1. Guys, this is not rocket science. You, based on even from what I taught you here, you can take one stock and freaking make a living off of the 1. Am I in a 2? Am I in a 1? Am I in a 3? Do I have a topping tail at 3? Do I have a bottoming tail at 1? Do you understand this? Do I have a bottoming tail at 1? Do I have a topping tail at 3? Am I at a 3 and have I cracked down with a solid red bar? Boom. I'm going to take the first color change. I'm going to protect myself above the crack. Guys, this is just, you do this over and over and over again. Like if we go back here, what is this? I've taught you what this is. Boom. Look, you've cleared. It's a clearing, cracking elephant bar. Boom. You dive into a clearing, cracking elephant bar, and you make sure you take the first color change. Let me see. Did I lose the connection? Did I come back? Did I come back? I hope I'm back. I hope I'm back. Did I get back? Yes, I'm back. Wow. Wow. All right, guys. I'm back. I'm back. Yes. Okay. But is that freaking amazing or what? Tell me. Like, you need very little else but know where you are in the cycle and know how to read the signs at the top and the bottom of that cycle, right? It's very powerful. Do you know how many people can't do that? Most of them. You know how many people are sloshing around? Well, I think it's going to go up. I think so. I think it's overbought. I think it's oversold. They don't have anything concrete. They don't have anything specific. They don't have a method. They're like, cycle? What are you talking about? Cycle? Cycle? What kind of cycle? They don't know anything. They're just rolling the dice. That should not be you. I don't want that to be you. All right? All right, guys. So let me try to finish here. Let me try to finish here. I'm almost done here. I'm gonna try to finish here. All right. Try to finish here. And so, guys, we could literally pick, we could pick anything. I'm going to show you, this is Microsoft yesterday, right? Here's Microsoft. Guys, look, just look at it. Let me put the 200 on there, though, guys. I don't know why I don't have the 200 on here. What is going on? All right. So we can put, oh, I do have the 200. Oh, I didn't. Give me a second here. All these moving averages here on the chart here. So here's the 20, here's the 200. Now, guys, look. Just look at what you have. This is the clearing elephant crack I told you about. Look at all the damage it's doing to the left. All right. And you don't really have a very toppy play here, but the clearing event I definitely want you to know, so to profit from. But Look at the bottom that I taught you. Not just one bottoming tail. This is yesterday, guys. I'm not going back and cherry picking anything. I'm just picking from yesterday. All right. So look at your you're far away from the 20. You got not one tail, but two tails. Some people might say that's three tails. So you get in on the bottoming tail bar, boom, protect yourself. You take the first color change. You see the first color change right there? So if you did 2 lots here, protection, 1 lot there to add, and the rest is history. Remember I told you how to determine when something's a top versus a pause? Well, this is a pause. It's not wide and whippy enough to be a top. Boom. There's your temporary top. And your cycle, this cycle is actually complete. It's just like that instead of like that. Okay? And it's just over and over and over again. You're going to play this. We can look at something like AMD. And basically, here, AMD gives you the topping, gives you the 2, and gives you the top there. I don't know if you can see that that crack there. But here's that macro top, the drop, leaving these people up there. Remember the people up there, right? You're being left. These people are left up there questioning because that drop was so big. Now you come back, these people don't get all of their money, and then you get the crack right there. Do you see it? Boom! Leaving the people at the tippy top left behind. They didn't get their money back. It didn't come all the way. So they're going to start selling. And this thing just melts. This is thousands of dollars if you read this properly and played it properly. All right? Everything I've taught you, the lower shoulder top with the crack that gave you the sign to play it. Guys, I find the sexiest traders, to me, the ones who are the ones who actually play the downside the best. All right, guys, look at the top that I explained to you. This is a 2-minute chart, by the way, guys. So every bar represents 2 minutes of trading. So you get the pullback. All right, you get the pullback, and then you get the new high. See the peekaboo new high? This brings in a lot of traders, and then they get slammed. Look at the slamming of the door. You see how the boom, the red bar slams the door on them, drops back below the prior peak, and the rest is history. So that's this top I taught you, right? Remember I told you, you get in right there. So look at it. You get in right there. Here's your top, right there. Boom. There's your clearing crack. Enter, stop above that bar. Enter on the first color change again. So here's entry 1, here's entry 2. The rest is history. I love that sound, by the way. Beautiful. And it's just over and over and over again, guys. We can look at this over and over and over again. So the thing that I want you to be aware of, is that the ability to see the market in cycles will elevate your trading game. Just whether you're looking at a 2-minute or a monthly chart, doesn't matter. Am I in the cycle? Am I in the 2? Am I in the 3? Am I in the 4? Am I in the 1? That will throw you head and shoulders above the vast majority of market players right there. Then your biggest opportunities are going to come from threes and ones, right? So when you know how to isolate the three at the top, and you know that the signs are topping tail bar, dual topping tail bar, or elephant bar crack, you know how to turn threes into money. And you can turn threes into massive money when you do it on the macro time frame, which what we were looking at the monthly. But you can also use this to make money every single day of your life in the market. Same concept, using 2 or 5 minute charts. Knowing where you are in the cycle. Are you in the 2? Are you in the 3? Are you in the 4? Are you in the 1? The threes and the ones make the where the biggest opportunities are. And at the 3, do you have a topping tail bar, dual topping tail bar? Do you get the elephant bar crack? You know the percentages. It's 70% follow through. The dual tail bars are 90% follow through. Are you far away enough to make, guys, this is what the vast majority of the world doesn't have. This is why they're afraid of downward markets instead of the downward markets being the most profitable market periods in existence. Instead of turning them into money, they actually get destroyed by them, but not you. Now, I would really like to take you deeper into this. I don't want this to be a 2-hour cursory thing. And guys, I'm telling you, I believe that 2024 is setting up something really huge for us. It's setting up something huge in Bitcoin. It's setting up something huge in the markets. And I want us to be prepared for it. And I want us trained for it. I want to train you for what potentially can happen in 2024. I want you trained by the time it happens. I want you knowing what to do by the time it happens, if it happens. I want it. And if it does, guys, I'm telling you, this is going to be the big one, because this is the every bubble, everything bubble scenario. But at the same time, while that big money making thing, that big money making event is possible for us, I want to also teach you how you need to make money daily from the markets, or at least weekly. You need to know how to apply these things on a day-to-day basis so that you don't put money into the market. You just frequently pull it out of the markets.